Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we have Macro Monday here at Container Exchange. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. This week, a lot of economic data is expected to come from the US. So we said, let's focus on the US for today. What's the situation here? Summer generally was very, very strong with lower inflation, good jobs data, high consumer spending rates, still fueled by pandemic savings. So still a relatively rosy picture, so to speak. But now signs are increasing that recession is actually the most likely scenario. And why is that? Well, first of all, if everybody speaks and expects a soft landing, a brace for impact. There was a very interesting analysis on Bloomberg. I'm going to share the link later on in the post, which essentially looked at the number of mentions of soft landing over time, and it generally spikes before a recession actually hits. So right now we see a significant spike there. Everybody speaks of and expects a soft landing, so that might mean a brace for impact. Secondly, then unemployment rates are still low, but risks skew heavily to the upside. So there's a model that essentially looks at the unemployment rate forecast and the 95% confidence interval, and you see there that there's a significant sort of upside risk to increased unemployment rates, which of course will then sort of have a negative spiraling effect on the economy. Next on, the Fed rates are likely going to stay higher for longer, despite that lower inflation rate, still because sort of the job market is still relatively good, etc., etc. But at the same time, we already see the credit squeeze getting started. Delinquency rates are increasing. Banks are tightening their lending standards, and typically that's also a preceding indicator for a recession. And last but not least, global economy is not helping. Just earlier this morning, or actually last night, we had manufacturing PMI data from China coming in that also significantly below expectations, generally showing that there is not a lot to be hoped for from that side of the Pacific in terms of pushing or rather pulling the US economy along. This week, like we mentioned at the beginning, lots of data is coming from the US, but very interestingly, everyone expects a sort of stability. So we have manufacturing PMI today, relatively stable at 47.7 expected. Tuesday, then job openings, also stable at a very low 8.8 million figure. Balance of trade, a lower overall import and export activity, but this is a mirror of what we've talked about over the past couple of months. There's just sort of a decrease in global trade over the last 12 months, and you see that, of course, now in the balance of trade and some of the exports and imports. And then Friday, unemployment rate still expected stable at low 3.7%. And coming back to that notion of if everybody expects a soft landing, brace for impacts, this week, everybody expects sort of calmness. Let's see how that turns out. If there are some negative surprises here, the negative spiral might start to begin, and that will lead to not a very soft landing, but actually a recession. So stay tuned for that. Have a fantastic start into the week. And happy trading, and see you all on Wednesday. Take care.